Standard & Poor's made headlines earlier this month when it downgraded America's credit rating. S&P is back in the headlines tonight because it's being investigated by the government for its role in the 2008 financial meltdown. Justice correspondent Bob Orr is following that story.
Scott, the Justice Department investigation is thought to be focused on one key question. Did Standard & Poor's manipulate its credit ratings of mortgage-backed securities in those years right before the financial meltdown?
In its latest filing with the Securities and Exchange Commission, McGraw-Hill, the corporate parent of S&P, confirms the company is a potential target, saying it's received numerous subpoenas and other government inquiries concerning the rating activity of Standard & Poor's. S&P, one of the three major bond raters, has come under fire since it downgraded U.S. credit on August 5th. But the investigation by the Justice Department and SEC apparently began months ago. The New York Times, which first reported the story, says investigators want to determine if, during the housing boom, S&P gave AAA ratings to mortgage-backed securities, which some of its own analysts warn were more risky. Jacob Frankel once investigated financial fraud for the SEC.
Did the ratings agencies have a basis for issuing the ratings, or did they somehow manipulate or inflate the reasons, and what was their motivation for doing so?
During the freewheeling days before the bubble burst in 2008, banks, Wall Street, and credit ratings agencies all made huge profits on mortgage securities. Home loans were easy to get, and high S&P ratings made those loans attractive to investors. Critics argue since investment houses pay the S&P to rate the assets, there was a built-in incentive to issue AAA ratings. But when it all came apart, trillions of dollars were lost by investors worldwide in pension funds, retirement savings, and home equity. John Taylor, who's an advocate for low-income housing, called for an SEC investigation 3 years ago.
People ought to go to jail. I mean, this was literally creating fraud against investors who were really relying upon the professionalism of these rating agencies to tell them how safe and secure these securities were.
Now, the Justice Department will not comment on the record about the investigation, but we're told it's not being run right now by the FBI. That means it's a potential civil case, more likely, Scott, to end in fines than real punishment.
Thanks, Bob.